Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, the 12th day of March, 2015, and this is the Daily Report for Gold and Silver. First, before we get into the show, I do want to thank all of those who were able to find the time and clear their schedules to attend our live webinar. I hope that you gained some insight and some meaning. For those that are interested in viewing the webinar but were unable to attend the live event due to time constraints, we have a link. It will be on yesterday's report, and that will allow you to view the recorded version of the webinar. To the markets, gold currently trading off about $2 on the day, 1152.29. It's had a high of 1165.70. It has had a low of 1149.20, and as I said, currently trading off a couple of dollars on the day. Interesting day in silver. Silver is currently trading higher on the day at 1556, and that puts it up roughly 8 cents on the day. 1568 on the high, so we're just maybe 13 cents off of the high, and 1543 on the low. We'll talk about silver in a little bit. So traders, first to gold and to our current trade. Of course, we did recommend entering a short position should the market break down between 1158 and 1154 is the way I worded it. We're marking ourselves short at 56. Stops are above 1165, and I really do recommend that you keep that rather loose, actually, when I say above 65 in this particular area. Of course, the high was 65.70, so even if it was tight, you were above that. But I recommend anywhere between 68 and 70, because when we look at this market, and I've brought up a crosshair rather than a pointer, this is 67, this particular low that it hit right in here. So if you have your stop set as high as 70, then what you're actually doing is putting it within the confines or the body of this candle, and we certainly don't want to see the market move down and start to pivot back up there. So for right now, my suggestion is we want to maintain our current stop, maintain our current short position. So in terms of the other markets that we're looking at, this is a 3-day off the dollar index. It is still trading above 99. You can see that it has come off of these highs right at 100 in terms of the dollar index itself. But if you recall from the last couple of days, when we compress and really look at different areas that the dollar's been, and I'm going to need to put more data points on. Hold on one second. And I've done just that. I've added some more data points and, of course, compressed this chart. But when we look at this chart and realize that this market has been, in terms of dollar index, as high as 120, there is still plenty of room to the upside. Our next real resistance level in the dollar doesn't really come in till 102.17, 61% retracement. Above that is 109 on the dollar index. So we could see further rises in the dollar. Traders, as far as crude oil goes, it is lower today, dramatically lower, well below 50 per barrel, trading at roughly $47 per barrel. And traders, take a look at this incredible resilience of the equities markets. Standard & Poor's E-mini 500, that is this particular chart we're looking at now, half-a-day candles. We talked about over the last couple of days, as this market came down, we mentioned a couple of things. The first thing is we noticed and identified these rounded tops being a precursor, and a really good one, to some sort of a correction in the market. Secondly, when we consider where these lows came in, roughly at 2040, 2046, 23% retracement, it is a retracement from the rally which really began October of last year at 1800, taking us up above 2100. We'll see if this holds, but for right now, it does appear as though we have a recovery in the market. And so traders, when we consider all of the fundamentals at play, the strong dollar, strong equities markets, weak oil, when we consider the fact that we have had tremendous selling in the market on a technical basis. We've talked about really that line in the sand. This is that line in the sand, because if we get a move below this point, especially if we break below these recent lows at 1130 that happened back in November of last year, then we've really given back way too much. Any kind of a bullish model, whether it's a move from call it 700 to 1900, correct 61%, that's all right. We can still make a case for a bullish model going back up. However, if it breaks below this point, there really isn't a bullish model around that fits the current scenario that we're witnessing in gold. Now, we know the market's been in a bear market. There's no question about that. The real question is, can it find support in this area? And the fact that we're short tells you that our current belief is that that seems less likely than the price of gold continuing to slide. And traders, lastly, let's take a look at silver. Silver actually up. Interesting. Gold was really the only precious metal that was down today. Platinum itself, though, that's quite interesting, trading below gold. We'll see how that kind of unfolds. But when we look at our silver chart, you can absolutely see where we're pulling some levels of support that we're seeing if it holds. That's this 23% retracement at 1518. If it can hold there and begins to move up, 1581 is our current level of resistance. We did not issue a short recommendation in silver, and I believe that we could see silver hold its ground a lot better than gold, because especially if we see a resurgence in the equities rally, the tremendous use of industrial silver would certainly be supportive, or could be supportive, in terms of the price of silver. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for the weekly wrap-up and review. Bye-bye.